Good afternoon and welcome to the end of day review for today. And today is October 17, 2024 and is a Thursday. So one more day we will close up this week. Even though this week we don't have any high impact news, but the last 2 days, the price moved very smoothly. On Monday, if we check, before we go to the detail of the price action, let's go through some economic data. So basically, this week is 42 week. And we are in the earnings season, so a lot of big company gonna report large cap right there. So the first sector is banking. So I think this week banking. Next week gonna be some big company. I think like Apple, Microsoft. Let's see when is Apple earning date. So yeah, the last day of this month, October. It's earning season, right? October, July, and April. So that's 3 month earning season. And then you have January. So January, April, July, and October, those earning season. And the end of the quarter gonna be March, June, September, and then December. So you see the seasonal aspects of the trading rate there. Keep that in mind. And at the end of this month, on the 30th, 31st, we have two, medium to high impact. It's the GDP data and then the PCE data. So those the last 2 days of the month. The last day of this month fall on Thursday. That's the reason why it go to 31st. And then you have a first Friday. I think it's gonna be right here. It's gonna be non-farm payroll. That non-farm payroll on October 31st. Excuse me, November. Yes, 31st right there. So we have Apple earning at the end, and let's see what is the Microsoft. Okay, so one day before that, so you have a Magnificent Seven, which is Apple, Microsoft. Let's see what Amazon, big tech company right there. Amazon 24. So Amazon is this week. Is that this week or next week? Okay, next week. Yeah. And then Apple, and how about Google? Let's see, Google, that 7 company right there. Google, right? Google earning October 29. Oh wow, that's huge. So you have 3-day line up right there. Google, Microsoft, and then Apple. And Amazon is 1 week before that. That means the next Thursday. Yeah, keep that in mind. So while the market moving, the earning also have a huge impact on the movement of the markets also. All right, now go into the charts, right? So overall, if we look in the daily time frame, you can see that the Monday set the tone or the range for this week. So it's a big range right there, and then Tuesday is reverse. It's Friday and Tuesday is reverse. It rate the low of this candle, which is the sell side right there. Then on Wednesday we have a retracement, and then on Thursday, which is today, is make a attempt to what, right? You have expansion, retracement, and it attempt to break out of this, but it failed. It's attempt to make a another expansion move, but it got rejected. So that's in terms of the liquidity direction, liquidity, draw on liquidity, or direction bias, for lack of a better word. It's the same idea. But look at the similarity right here. So we need to watch for. All right, so there's some similarity here. All right, so right here you see this giant, a huge up close candle. You see that, and then you have a reversal, and the next day is it retrace, right? It retracement right here, reversal. Next day it retrace, and then it boom. You have similar, right? See, it's gonna be turned into a reversal right here. So basically you have a expansion and then retracement. Retracement can turn into reversal. So look like that, retracement right here, and the expansion, and then boom. Take watch for that. Watch for it break out that level and then it reverse. So let's see. Right now is maybe Friday. Tomorrow it could break out that level. You see that it create, and then boom. So what our Friday and Monday will give us some signal whether it's gonna be reversed or it's gonna make another expansion to the upside right there. So that's the high time frame right there. And look at the beginning of the day when we take the screenshot of this. So we take the screenshot at the beginning of the day for today at 8:40 exit time right there. So you see that at 8:40 it looked very strong. It looked like it's gonna make the expansion, but as soon as the market opened at 9:30, it show up right away. And here's our analysis when we're going. Okay, here's the 15 minutes. So basically we saw right here a expansion. Right? You can see that in consolidation and then expansion. And then you have retracement. Right? This is just a retracement. It looked like a reversal, but it did not take out the low of this expansion, so we treat it as retracement. It makes more sense. And then you have a huge expansion right there, which is the like of. So right here, our logic that it's gonna be retracement or reversal right here. It cannot go into consolidation, so we can engage right away at 9:30 or at least let 9:30 formation, because there will be no consolidation right here, because you have expansion, retracement, expansion. It will not go to consolidation. It did a little bit right here, so the next step is going to be a retracement or reversal. That's our analysis right before that. We anticipate that it's going to be a retracement. Basically, it's retracement, make another expansion, or kind of reverse from here. They got the huge liquidity down here, and we identify up here there are a liquidity pool. As soon as it hit us, prior day, I think Monday, the Monday high, it it make it reversal right away. So and at 9:29, okay, right there. So at 9:29 we anticipate it's gonna be a reversal, right? At 8:40 we say that okay, look at this, you can see, okay, so at okay, so at 8:30 we just have this information, but at 9:28, 2 minutes before the 9:30, we have more information. Basically, we see another expansion right there. Then definitely this gonna be a reversal. It's no longer a retracement. Right? At first, we put into here two possibility, two scenario. Right? We have binary choice, retracement or gonna be reversal, and we wait until right before open. We have more information, which is it make another expansion. Then this one have to be a reversal. It will not retrace from here because it already complete. You see that it break through the liquidity pool right here, which is the high on Monday. You see that? The high on Monday. Look at the daily. You see that it did hit, yes, the daily right here. You see the high on Monday right there. It hit that one. That means Mixon is accomplished. It did hit, it breakthrough. It create a new high. So that means this expansion move is already complete, already exhausted. So the momentum gonna be go to reversal. And look at right here. So the same idea right there, which is retracement, right? We expansion, and we treat that at the retracement right there, and you see the extended, the expansion, the last expansion, then it gonna reverse and hit the high time frame reversal coming. And let's see if that correct. Right at 9:30 we're gonna see. So at 9:30 we see a beautiful setup right there for us. Okay, right here at 9:30. We take it a little bit late right there, but you have a nice up exactly 9:30 reversal. You see that? What do we see? We see breaks test from above. Actually this one is not touched the level, but it gives you some idea right there. It tests from above and it reverse. It's not perfect, right? But but if you are combine the time sensitive, which is at 9:30, you have very high quality setup. Let's look at the reversal type 1 that we have in our playbook. All right, here's our beautiful and our favorite setup. Reversal type 1 for breakout. That's that's an idea. The reversal happened when the 4 breakout happened. That's an idea. So it trapped people, right? People thought that gonna be a real breakout. You mark this level right there. It break that level and then it tests from below and then it reverse. And that's the long setup. But if you go with a short setup, break that level. You see that level right there. It break it and test from above. In this case, it did test level, the test level, and then it reverse. That is the best scenario. That is simplified. But right here is slightly different. It didn't touch this level, yes. But the good thing is that it happened at 9:30. So the reverse happened at 9:30 gives you a good confidence right there. So you can take the short trade. We did 2 short trade. We execute, beautifully, flawlessly. we this is a beautiful setup. We will show you later, but we want to go through the high level. So why we do what we do, right? We see that, wow, it's gonna be a reversal. If we're gonna read a reversal, then we're gonna we stay in the trade as long as possible. So basically let our learner, let our winner run. You have to know when let your runner win and when we need to take a quick profit, because the reversal move it always go very huge. That's an idea right there. And sometimes if we trade in the retracement right here, we cannot let this run, right? Because it's gonna reverse. You're gonna make a second neck lock. So that's the whole idea of understand the price delivery theory or model. Yeah, here's the famous ICT, price delivery model or theory right there. We call it BDM or BDT, model. M stands for model and T stands for theory. Either way, it's the same idea. So if we want to know when we need to stay in the trade, then if it gonna be a expansion move, then okay, let our winner run. All right, that basically we stay in the trades as long as possible. The same for the reversal. The reversal is gonna be the huge move. However, if it in the retracement or consolidation, then if we want, we have to take a quick profit. So those two state that we need to take quick profits, and these two state that we can stay in the trade as long as we can, or let the winner run right there. Otherwise, if we go into this situation, we let our winner run, we will get top out, we get stop out right there. So that's very critical to see what state that the price right now in. So basically, go back to the analysis we have. Yeah, so right here it's gonna be reversal. So we should let it run, and you see it's perfect right there. This candle, it will be perfect. It really touches the level. You see, it will be perfect if it touches level. But however, remember the time also is critical in our trading, right? Because time and price. I think ICT also emphasize that sometimes the time is more important on the price, which is absolutely right. Because you need the time. With the 930 is where people put a huge order in, right? That's where the market move. And look at the setup, it's right there at that time, then we can go in and take the trade. So basically, it reversal right there. And let's take a look real quick. We have a tap rolling, right before 9. So basically expansion, and then it's go to retracement, consolidation, and then expansion. That is gonna reverse right away because come out of this retracement and consolidation right there. See that it break that level. We're watching the recording right now, so you can have idea right there. Boom, we see. Yep. Yeah, look at the magic happen right here. Yeah, you see that? The 930?
The markets are open.
Yeah. Boom, you're gonna go to 930. Boom, you see that? Break, test from above. Boom, reverse. Reverse very quick, very fast. Oh, wow, see that? Yeah, we should aim for the target right at mid of London range right there, and previous day PM high right there. Hit right there in less than 5 minutes we can break out. Yeah, let's look at the trade we took. But anyway, we couldn't ask for better price action like today. Yeah, here's the trade we took. Actually, we're going early because as soon as we saw this rejection and it hit the high time frame, we know that it can break and reverse back right away. That is the type 2 right there. I mean type 3, which is less common than the type 1 and type 2. There are type 3, which is break and then reverse right away. So we anticipate that also. So that's which way we're going a little bit early. We're going right at 9:15. You see, before 9:30, which is 9:15 right there. So around 9:20 for that matter. And see, boom, it goes to our way, and then boom. All right, and now we have right there. Perfect. Right here, you still have a beautiful setup. Because you have breaks test from above, this one gonna reverse. But look at how the 9:30, it looked like what? Look like gonna be, rip up, right? But no, it flipped. That is where we need to short them. Don't get scared, So as soon we saw it flip, you see that we add the sign right away. We add 10 more in there. All right, and as soon as we get in profit, we take profit right away because we know that it's gonna retrace back one more before going down. So we want to take advantage of that. So we take profits. You said take profits, and then we just keep one side, and then we wait for the retracement up here. We short again. Let's see. So for this trade, we execute very beautifully, very flawlessly. You see that we're gonna retrace back. We short again. Yeah, we take a quick profit right there. You see, because we know that it's gonna retrace back. Yes, see that? And I think we add again. Boom. Yes. You see that? We sell again.
Order filled.
Yes. So we sell again. So we take advantage right there. Sell again.
Order filled.
And then we buy again. Take quick profit right there. And we let this go hit the target with only one side right there. So basically, if we are wrong, we still make money. But if you're right, we make more money. That is a very good strategy right there. I think we will buy one more. We do want to buy one more. But we're not gonna. I think we buy one more, and we sell when we make money. You see that? Yes.
Order filled.
Yes. So we do 3 times in a row right there. And then we let this one, you see that? That's beautiful, beautiful execution right there. And we let one contract, let it run into the target. And it did hit. So beautiful trade. You could ask for better than that. But if we let it run, it go, we just aim at 3R, right? 15 point. But actually it hit all the way down here. So we just aim for what? 3R, right? We go from here, 3R, which is 15 point, right? Yeah, right there. But we let it run all the way max, we have another 2R more. So 25 point is 2R more. 1R is 5 point. That's our unit right there for risk reward ratio. So that's beautiful trade right there. Perfect. We can call it a day. Beautiful right there. Okay, so here is another beauty right here for the price action. So we learn our way to understand price. Whenever we see a huge down move, look for the next doji candle, which is this one. Look for that it taps the it make a range and look for that range. And we know that this failed to break out the high, it just trade the high only, then get ready to short them. Yeah, we were not available to take the short trade, but we watch the pattern. We see, you see that right here. Basically, if it just rate the high, which is the buy side liquidity only, then you know that the next leg down gonna happen. Because look right here, what do we see right here? We see the reversal right here. It will not reverse from here, and also it will not reverse from here. It will make a second leg down. You know why? Because it's reverse here and reverse, it cannot reverse here. You remember the principle that we have in the price delivery model. You will not have the price just come out reverse and go back to reverse. No. After reversal, it's gonna go to retracement, right? Retracement. Then from retracement, it's gonna make a second leg up or leg down. It will not go into reversal right away. I think we do have that principle. Here the principle we spell out the other day. Basically, you will not have reversal to reversal force. It will never happen. Right? You will have reversal go to consolidation or retracement. It will never go to reversal. And the same right here, you will never have consolidation go to expansion and go to consolidation. No, it's false. When the price come out of expansion, right? When the price come out of consolidation, which is expansion move, it will be retraced, and then it can make another leg up or leg down, or it turn into reversal. So it will never come back to consolidation. That two false statement right there. It will never happen. So it will never happen in this C1, number one and number two right there. That can help us to eliminate a lot of possibility right there. I mean, look at today. Look at the price action today. It's help us to eliminate and know what is the next move the market gonna make. Right here, we know that it's not gonna reversal right here. When you see the up look, it will not reversal from here because it just come out of reversal. It will never go back to reversal. It will go to retracement, and then it make a next leg down. Okay, right here we make a little bit mistake right here. Right here we thought that okay, next leg down, done, right? And then it's gonna be retrace. It's gonna reversal from here. We make mistake, but it's not enough time to do that, and it haven't sweep out the liquidity of the first leg. The purpose of the second leg have to take out the liquidity from the first leg. So don't go long right here yet. Too early. We make a mistake. We go long right here because it's a beautiful setup. We see that break, test from below, and then reverse. That's fine. You know, you can take a setup right here, but remember, it haven't finished that. So you have to quickly move to break even or take a quick profit because this is not reliable because it don't have liquidity up here to go up. It needs to take this one, the low of this one of the first leg. That's the huge lesson we learned for today. Let's look at analysis right there. Yeah, here's our screenshot. We check at the now at 10-15 candle right there. We know that it will not be a reversal from here because the price has come out from reversal. Let's add it, put the contact right here. So basically we have expansion right here. You see that the expansion, right? You have expansion and go to retracement, consolidation, and price come out of consolidation, it expands, and then it reverse. When it reverse, it will never come back to reverse. Basically, this one will not reverse up here. It will retracement and then make the next leg down or the second leg down. That's That's our anticipate right there. So it's number 2 is reversal, right? So you see that when we understand this and it will become our nature, second, then it's very much easy to in and out of markets because we know what next move we're gonna make. So we're not gonna go long from here. If we do, then we have to take a quick profit. Yeah, we did apply that strategy, right? Then if we go short, we will have to wait for it short take out all the liquidity, from the low of this first leg. Okay, so right here you have a reversal rate. So right here it have to be retracement, and retracement gonna lead to expansion. In this case, expansion meaning that it's gonna be a next leg down. Yeah, it will never reversal. Remember, it's only reversal here. It will never reversal. So that's the idea right there. Note that no reversal here. Why? Because the price never go from reversal to reversal. Thus it falls. It never go there. Because the mechanism of the price action, because you don't have liquidity. The reason why price move because it need the liquidity, need people put the order in. It cannot reversal and go back to reversal right away because people don't have time to put in the. It takes time to build liquidity. That's the idea right there. As soon as we under this concept, then everything become very clear to us, very obvious to us. Because it needs time for people to put in order. You cannot just move reversal. You cannot move crazy like that. That is the mechanism right there behind the thing, or mechanic. So now we can understand, really appreciate this wheel right there. This wheel, price delivery wheel right there, and ICT really nailed this concept. I mean, we studied this concept like a years ago, and it doesn't make any sense to us at all. But a year later, we practice. Now it makes more sense, and we become, really appreciate ICT. Give this to the community, and we learn the huge right there. Yes, go back there. So now we eliminate the reversal. So now if we go long, we will take a quick profit because it will not reverse here. So there's no reason to go long and let the winner run. We have to take quick profits and then anticipate a second leg down. That's the whole idea right there. So 10, 15, let's save that. All right, here's the trade we execute. Right, you see that we know that we're gonna go long right here. When you watch in the real time this candle flip, then we go long, and we know that we have to take a quick profit right here. We will not let the winner run because it will not reversal from here. With that in mind, we take quick profits. You see that as soon as we saw the candle flip, we go long right away, and we put in a very big side. And then you see that. Okay, so when it go here, when it go to this buy side liquidity, the high, this one, we take profit right away. We take right away. See that? We sell right away, and only keep one contract. Basically, we scale out. Boom, one more time we sell.
Order filled.
Yes, we sell, we get out. And let the last contract go to the target right here. We aim very low right here. Because we see that the candle ran theory right here, it tried to break the low of the candle, but it fell twice. Then it's gonna read the high of this candle on the buy side. So we let only one side, one contract run. It did hit right there, so it's beautiful. Why we take profits? We will, because this is gonna be a retracement. It will make a second leg down. So don't let the learner run, because there's no reversal from here. It's not gonna go up there, so should not let it run. So that's the whole idea of we need to understand the price delivery theory and model, so we know which one we need to take quick profits and which one we need to let the winner run. That's the key principle right there in our trading career, for that matter. All right, I think we run out of time. So we thank you for your time and interest. We're always grateful for this opportunity. We do what we love, and success is coming our way. Day by day, little by little, in every way, we're getting better and better. Have a great evening, and see you tomorrow.